G'day everyone, welcome back to Pete's Investing. Today is May the 10th, 2023, the spot silver price update. Gold's not making much movement today. Silver is likewise moving sideways, but we'll just go through these and recap with potential possibilities for more long positions. On the weekly, we're in a long, indicators are showing long positioning, whereas on the daily it's showing a neutral positioning. So let me go through each of these first. Again, for those new to the channel, we look at triple moving average of the price chart. That's moving averages 3, 5 and 60. And we look at the moving averages of the CCI 150 of 5 and 50. You'll notice they're both in alignment, so they're both showing a bullish signal. Back during this period, it was showing a bearish signal. And when it's flat, it means it's a neutral, which means one of the indicators on one of the charts is not matching up with the other. So avoid trading. So again, primarily long trades at this point, based on the weekly. On the daily, you'll see there it's flat, so just go avoid long or short positions until we see this break into a bullish momentum, and in which case you can then trade on the lower time frames. While I'm on the daily, you'll notice here as well I've got this resistance at 2607 and a support at 1991. I did draw this Fibonacci level here, and you can see there the price was bouncing just off that 23%. And now it's coming and resting on this diagonal ascending trend line after it bounced off the resistance. Now that descending trend line, if I zoom out, you can see there it's between those tops and through those key areas. And I've also got a couple of other ascending and descending trend lines, and I'm going to keep them there. Even though it looks a bit messy, I'm going to keep them there because it may actually come and gravitate back. You'll notice there it was bouncing in that little range between those two diagonal descending trend lines. And just also a lesson for divergence, just be mindful. Back here it played out. There was showing a bearish divergence on the CCI versus a bullish divergence on the price chart. Now when that plays out, and it did in this case, it broke to the downside, which means the divergence on the CCI was correct, and we should have been careful of going short in this area, which it did play out quite nicely. And I did mention in the last video, gold is in a current process of playing out of divergence, so reference the last gold video to see how that's performing as well. So that's the daily. So again, neutral in terms of going long or short. On the hourly, and again, when the weekly and the daily are in alignment, we trade on lower time frames, and here I'm showing you the hourly time frame. So again, you'll notice here there's the diagonal trend line. It's hovering around that at the moment, based on the daily as well. But you'll notice it's if I zoom out, one trading idea is when going long. So when the daily does confirm long positions, you trade on the hourly or smaller time frames when the candle breaks above the fractal, like it did there, when it goes long. Or alternatively, if it's showing short signals on the weekly and daily, you take the short positions when the candle breaks below the fractal, like it did there and there, etc. I've also got this up here, a back testing, and you'll notice here this goes back to the start of 2022. And these individual little blocks here indicate single entries made. So when you enter and exit a trade, and where it's stepped, it means multiple entries are made using the average down process. Again, we don't use stop losses, we use the average down. And that just shows you the drawdown on your profitability. So this is a profitability chart. And it shows you had you got caught out in that period there, and you traded with a 5% decline. That would have been each, say 1, 2, 3, 4 entries made for that trade. Ultimately, when it paid out, you'll notice it paid out for those 4 contracts there. After accumulating over that period, you would have increased your profit. Now, again, we don't suggest you trade. This program is running across the board for all time, for the whole period of that date range. So in other words, it's not differentiating between the long and shorts on the weekly and daily. So if you'll notice there, for that period there, if you look at on the daily, and on the daily it's not showing it, but on the weekly, let me put that cursor there. So look at the that thin red line. I'll put that cursor here, actually, you can see it. It would have been around there. Yep. So around there, if you notice on the weekly and daily, they're showing no long positions. And on our hourly chart, we're running an hourly program there. It's saying you would not have taken the trades on the hourly, so you would not have taken those trades had you followed the weekly and daily trends. So just to be mindful of that. Again, this program is running throughout the whole period. It's not differentiating between long and shorts on the weekly and daily. So to understand how to trade that and other trading strategies, reference the links in the description below. Subscribe to my Patreon page. It shows average down strategies. We scan for stocks, currencies and commodities. Subscribe, like and share the video, and I'll see you in the next video. Thanks for watching.